All right, we have that much-awaited soundbite from the Economic Affairs Secretary, S.C. Garg.
Section 7, sir.
No comments.
So, but has the government invoked Section 7 just that much, sir?
No comments.
So that means the government has, right, sir?
No comments.
Okay, I think that's as clear as it can get. The reporter in question asking if the consultation under Section 7 has been invoked, and the answer was no comment. Well, a strong denial would have helped the market perhaps. A no comment is keeping the speculation alive that the section has indeed been invoked, and the speculation or the fear in market circles is that if that section is invoked, a governor could take the extreme option of not wanting to continue.
Okay, that's an evolving story. We'll keep tracking it for you. But in the meantime, some more numbers that have come in. Symphony has followed up a weak Q1 with weakness in Q2 as well. The margins have seen a sharp fall this time around. And Rupesh Shah, the executive director of Symphony, joins us on the phone line to talk about that. Rupesh, thanks so much for joining us. It's been a massive margin contraction this time around to sub 20% versus about almost 30% you used to enjoy same time last year. What went wrong, and do you foresee more pressure in the second half of the year?
First and foremost, as far as operating margin is concerned, gross profit margin is concerned, it's on a standalone, it's hovering around 50.50% versus 53% last. Now, finally, when it comes to the EBITDA margin or PBT margin, it's also the function of the scale and size. And on account of bad summer, YOY on a standalone basis, there is a 20% degrowth, which is in line with as we had conveyed during summer months and post-June quarter. In fact, actual collection and sales in off-season is better than expected. Not only that, during off-season, our market share would have been easily in excess of 90%. Not only that, inventory at a company level, despite trade is sitting on inventory, our inventory is absolutely at a normal level. And there were also some apprehensions that in respect of asset like business model and credit terms, we may take some beating, but it can be seen that in terms of capital employed in core business, that is Hercula, it's merely 38 crore for the quarter.
And Rupesh, good morning. What was the volume growth in second quarter?
No, we don't disclose the volume growth, but by and large, volume and value growth are at par, growth or degrowth.
Okay.
So that is 5.2.
Pardon?
Your consolidated revenue says 5.2 in terms of revenue, so we should take that as the volume growth you're saying?
That's right, but we should keep in mind at a consolidated level, starting 1st July, it also includes our recent acquisition of Climate Technology Australia.
So without that, what would the revenue have been? Like to like?
So on a standalone basis, as I said, revenue is down to 147 crore from 184 crore. That is down by 20%.
Sure.
Okay. You also said that because of a bad summer, you had a weak first half. But what are you foreseeing in the second half of the year? What could the, the revenue growth look like?
Yeah. So as of now, we have reasonable visibility about the December quarter, and we are confident to register quarterly sequential growth. Having said that, on YOY, still on a standalone basis, there may be a degrowth because still there is a spillover effect of bad summer. But as far as Climate Technology Australia is concerned, December and March quarters are supposed to be strong months. So their profitability should be added in both the quarters.
Okay. Rupesh, you've been a veteran in this market. Is it looking like one bad summer, or are tastes changing? Do you expect this downturn to continue?
Normally, after two back-to-back bad summer, it is expected that there should be a good summer, but we need to keep the finger crossed. But by the way, in the process, fringe players, marginal players, normally, many a times they are unable to survive. And we have also heard that some of the marginal players are also really facing big cash crunch.
Okay.
While as far as Symphony is concerned, Even in respect of treasury, it is up from about 400 crore as on 31st March to almost 580 crore, despite making large investment in acquisition.
Can you also tell us what is the exact exposure you have to the IL&FS group, and is there anything to be concerned about with respect to, the recent crisis, etc.?
Yeah. So as we have shared in the notes to the accounts, our total exposure is about 21 crore in the form of preference share maturing in 2021 and 22. Okay. And as a prudent accounting practice, we have decided to take an impairment in the profit and loss account of about 4 crore, which is as per the valuation of India's. It means remaining value what we are carrying forward is 17 crore.
What's your strategy for next year, so to speak? Is there any vision that you have laid out?
So, as we conveyed earlier, Symphony is now looking for Symphony version 3, and as a part of Symphony version 3, there is going to be volume-led value creation. That is in respect of domestic market, and in medium term, we look for major growth in international business as well as centralized air cooling business.
Okay.
Have you,
and to maintain our market leadership.
All right,
Okay.
we leave it at that. Nupesh, thanks for joining us. Well, that's the word coming in from Symphony. The first half of the year was impacted because of the slowdown in a bad summer.
Sorry.
The markets are falling some more, actually.
I think, that's, sorry, I was going to remind you that it's a new low now for the day. For the morning, we had stopped at 10,125 earlier in the morning at 10 o'clock. But now we've just plunged that into 10,115. The Nifty Bank took a dip up to 1% lower. So it was at 1 point 240 down. And the advanced declines now are beginning to show a bit of a strain, with the declining stocks being more than the number of advancing stocks. Maybe we want to pull up the rupee again and see if that is the reason why we are seeing so much of worries. As you can see, the red and green lines have now crossed. The dollar rupee at 74.07. It had touched 74.12 and now at 74.7. So, okay, I think some public sector bank selling of dollars is keeping a lid over there, or for whatever reason, we are not seeing that going worse than the early morning high for the dollar.
Okay. For the equity markets as well, a lot of stocks have hit the low point of trade. Bajaj Finserv has once again resumed its downside. In fact, it's taken a lot of the NBFCs with it. And now the Sensex is almost down 300 points, so not looking good at all for the markets. But L&T is one stock in focus ahead of its earnings today. Anisha joins in to give us the key expectations. Anisha, what can we look forward to?
Well, we can look forward to a good quarter from L&T this time around. We are looking at a top line growth of double digits, that is 12%, to come in at close to a number of 29,600. EBITDA margins are expected to remain steady at 11.2, 11.3% mark. Profits, yes, optically look lower at 1,600 odd crores, but there are a few one-offs that you need to keep an eye out on. Of course, there was an exceptional gain last year of around 140 crores which goes out, but other than that, there is expected to be higher depreciation on account of Hyderabad Metro, plus the higher taxes as well as lower other income is what is expected to impact the company's bottom line. But other than that, operationally, it is expected to be strong. In fact, for the core infrastructure business, we are looking at a top line growth of around 10%, margins of around 9%. Also remember, the IT and financial services results have been really strong, and that is what is expected to support the top line. Separately, the order inflows have been very strong. Expect a number of 42 to 45,000 crore rupees there. Watch out for management commentary and any word coming in on the working capital. Back to you guys.
Well, of course, order flow, working capital, and their vision of the future will be very important in L&T. Numbers and management speak, management body language, very important. Thank you very much. Lupin, Ekta?
Well, Lupin's expected to report what will be a subdued quarter, Lata. So revenue expected to be flat this quarter. Margins will be the most important because that was the key disappointment last quarter when it came in at around 13 to 14 odd percent. So whether or not it's stable at those levels, that would be watched very closely, or whether there is any sort of further worsening. Now, remember that the US market, the mother market for Lupin, would be the most important because it is impacted by pricing pressure, higher amount of competition in key drugs, no big launches, and a warning letter on their key plant Goa. and hence, what the revenues look like for the US market and what the guidance would be would also be important. Now, remember that for a company such as Dr. Reddy's, we had India and emerging markets which really fueled growth. Whether that equation works for Lupin would be something else that the market would watch closely, besides the commentary, which would be also very closely watched with regards to the warning letter on Goa, as well as the Pithampur 2 unit, as well as what the new launches or the launch pipeline and the pickup in key drugs in the US market, such as women's health drug Solosec, would be looking like.
All right, Ekta, thanks a lot for that. We'll also be looking out for Tata Motors numbers and don't have high expectations this time. It's going to be another very weak quarter. JLR, the disappointment there is going to stand out. In fact, it's been a 20% fall in volumes and a 300 basis points fall in margins is what we're expecting. The standalone business will do well, but as we've been telling you repeatedly, it doesn't count for much really. And the stock is one of the biggest losers this year.
Yeah, so that's not a sudden bad news. It's been getting factored in. But for the market, one doesn't know whether it's bad news that will come. Okay, we have Mr. Hasmukh Adhya on the line.
No.
Let the department.
So later, so when you
Let the department. Okay.
Let the department decide is what I heard, or let the department say. So no one is denying it. I don't know how the market's going to read that. At the moment, it's not at the lowest point. It's about 10 points off the lowest point of the day. So as we wind down on Bazaar, we will once again play out to you some reactions on the ongoing tussle between the government and the Reserve Bank, and the most important development being that the government has initiated consultation with the governor under Section 7 of the RBI Act. The Section 7 of an RBI Act is treated in central banking circles as a Brahmastra. It's an extreme moment. The government gives directions to the RBI. So far, the central bank's autonomy has been respected and directions have never been given. The directions have to be given in consultation with the governor, and we understand the consultation process has started, which means for the first time the article has been invoked. Here are the reactions. Thanks for watching Bazaar.
Given the nature of our situation right now, we can do without this crisis. This is a completely avoidable crisis. Eventually, the RBI's concerns have to be respected. If at all RBI is saying, listen, don't relax these norms, one way out would be for the government to infuse capital into the banks. Once that's done, and there was a plan under Indradhanush and under other plans, the 2.11 lakh crores, etc., bring in the capital and therefore assuage the concerns of the RBI, and then legitimately ask for limits to be relaxed. So, maybe there are ways around this. A couple of things you have to watch out for. One is, how deep is the resignations in RBI? Does it stop at the governor? Does it go below him as well? People like Vishwanathan and Viralacharya have been espousing the cause quite strongly as well. And then next is who comes in place of Dr. Patel. And I'm probably going ahead of myself, but, if at all this does happen, and I hope and pray it doesn't happen, you have to get an extremely strong and credible name as a quick replacement. And then eventually, what does the government eventually do with the new RBI?
Really don't want to speculate on rumors, but clearly the reality is that we have seen in the U.S. itself President Trump be extremely vocal about his disagreement with the direction taken by the U.S. Fed. So it's not surprising that governments around the world, and I guess India is no exception, where the governments and central bankers are not seeing eye to eye as the liquidity flood that has propped up economies and made people feel good. As that liquidity is ebbing, politicians are looking for people to blame, and central bankers have become, I guess, a popular whipping boy. I certainly am hopeful that good sense will prevail on all sides and there will be nothing untoward.